Hi, everyone. Good afternoon. My name is Danielle Nicole, the research analyst here at the Caribbean Alternative Investment Association, CARIA for short. And I would just like to thank you guys all for joining us here today. If this is your first webinar session, welcome to the Beyond the Portfolio series family. We're thrilled to have you here. Here at CARIA, we are really committed to fostering knowledge sharing and capacity building across the region. And so for that, today's session is a key part in our mandate. This webinar today, as you guys would see from the title, is focused on climate financing. Oops, you're not hearing? Can you guys hear me? Can anyone else hear me? Okay. All right. Okay, good. All right, thank you. Right, so as I was saying, today's session will be focused on climate financing and the green economy, which is a continuation of a session that we did earlier in March, May thereabout, about the blue economy. So if you missed that session, don't worry, that's posted on our YouTube page, and I'll share the link in the chat for that so that you can catch up on a later date. No, I won't keep you guys any longer because as you can see, I have three beautiful ladies on the screen with me here. We have a lovely all-female panel that's here to discuss climate financing and the green economy. Our session today will be facilitated by Ms. Patrine Cole. Patrine Cole is an environmental and geospatial analyst with over 10 years of experience in geospatial analysis, database development, and data collection, amongst many other things. She's also a trained urban planner that has been actively involved in policy development and addressing critical environmental and sustainable development issues through various steering committees and working groups. Her contributions have informed national policies and Jamaica's position on conventions and international agreements. She recently served as the co-country focal point for the Pro-Blue funded Jamaica Blue Economy Framework Project, managing project outputs and ensuring compliance with timelines and alignment with environmental and sustainability objectives, all while facilitating collaboration among national and international stakeholders. She also serves on the Land Information Council of Jamaica Board. Patrine has a Bachelor of Science in Urban and Regional Planning from the University of Technology, Jamaica, and a Master of Science in Geographic Information Science from Birkbeck University of London. Without holding you guys any further, I would love to hand over to Patrine Cole.
Good afternoon, everyone. Welcome to today's Beyond the Portfolio webinar series. As Danielle has said, I'm Patrine Cole from the Planning Institute of Jamaica. And joining me today are two very capable guests, Amaka Nsofor and Patrice Smith-Lindo. And I'm going to be giving you a little bit of information about Amaka and Patrice. Now, Amaka is a seasoned debt capital markets professional who currently works at the International Finance Corporation, a member of the World Bank Group. She has a strong track record of originating and executing bond transactions for clients in various industries and sectors, including green bonds. Prior to joining the IFC, Amaka worked at Standard Chartered as an executive director, and she was the vice president of debt capital markets at Barclays and Standard Bank. She has contributed to the development of domestic bond markets in several emerging market economies, particularly in Africa. And with her global experience, it spans sub-Saharan Africa, Europe, Latin America, the Middle East, and Asia. She holds a Bachelor of Arts in Accounting from the University of Lagos and a dual MBA from Columbia Business School and London Business School. She's also a qualified member of the Chartered Financial Analyst Institute and the Institute of Chartered Accountants of Nigeria. Ladies and gentlemen, it is my pleasure to welcome Amaka today.
Thank you very much, Patrine.
You're welcome. Patrice Smith-Lindo is a consummate professional with a strong background in project management, business development, and consulting. She holds a master's degree in leadership and innovation from Edinburgh Napier University and a project management professional certification from the Project Management Institute. Patrice has a proven track record of successfully managing high-value projects, particularly at the Jamaica Stock Exchange. Her expertise includes public-private partnerships, business advisory, and small and medium-sized enterprise development. Patrice has previously worked on privatization projects and has served as a managing director of a business consultancy firm. In her current role at the Jamaica Stock Exchange, she is driving the implementation of their sustainable finance agenda. Ladies and gentlemen, welcome, Patrice.
Thank you.
All right. So today, as was said before, we'll be discussing a very important topic on climate financing for the green economy. As a small island developing state, Jamaica faces unique challenges due to our geography, our small size, and our limited resources. The green economy offers a promising path to sustainable development. And so to begin with, I'd like to ask Amaka and Patrice if they could give an overview of what the green economy entails and why it is crucial for sustainable development, particularly in the context of emerging markets and small island developing state like Caribbean nations. So Amaka, could you go first and then Patrice?
Thank you very much, Patrine, and pleasure to be at this webinar. I spent some time in Jamaica a few weeks ago, so I've actually kind of fallen in love with the country. But I think, when we talk about green economy, I call it that green economy is just all about creating a livable planet, basically. Planet where we can all live in a sustainable way. And I think over the course of the years, for those that have been following a lot of the research, you would see that a lot of studies have been done that have implicitly tied the activities of human to climate change. So I know we have some students on the webinar as well today. And when you hear climate change, it seems like a buzzword, but it's a reality. And when you talk about climate change, you're really talking about the change in the average world temperature. And what is causing that? It's a lot of the human activities that we do, whether it's burning fossil fuel, diesel cars and generators, burning energy in buildings that are not green, transportation, like so many industrial activities. It releases greenhouse gas emissions into the atmosphere, carbon dioxide, they trap heat, and it makes the atmosphere a lot warmer. So that is a very simple explanation of what this whole concept of climate change is all about. And if we look at what the world is today, I think as at 2023, it was actually recorded as the world's hottest year since 1850. So that shows that this is not something that we can joke around with. So back to your question on what is a green economy, I would look at a green economy as what can we do? So it's basically a model that reduces the environmental impact of what we're doing. So the environmental impact from our production, our consumption, how can we have a model that reduces the impact of that? And that is what we call the green economy. Maybe then bringing it to emerging market in particular, I think particularly the Caribbean, and you mentioned it at the start of the webinar, that Jamaica is actually, has faced a lot of these impacts, whether it's, hurricane, extreme weather, sea level, land erosion, or whatnot, like many of the island countries. But unfortunately, Jamaica is actually one of the lowest emitters of GHG emission. So we tend to find out that in emerging markets, these countries that actually have the least emissions particularly end up being the ones that bear the most of the brunt. So what can be done is really, I would say, through investments to fund sustainable development. If you look at maybe some of the statistics that UN has released lately, about $4 trillion is needed to fund critical investments for sustainable development, whether it's in energy, transportation, housing, agriculture. And a lot of that would come by tying financing, the way we finance, social and environmental objectives, and basically linking the two together. So green economy is mostly just a pathway. It's a strong pathway for us to achieve sustainable development, primarily through financing. So that's my kind of brief background or intro, and I'll just pass on to Patrice.
Hi. Just want to underscore the points that Amaka and Patrine would have talked about in terms of Jamaica being a small island state and just our vulnerability based on our geographic location and our dependency on natural resources. Or the recent passage of Hurricane Beryl in one instance would show our vulnerability and our sector viability, our livelihood, how easily it can be disrupted by the passages of natural disasters. And as we see, the natural disasters are becoming more intense and frequent. Where it is that our water resources, our agricultural sector, our health sector, human settlements, our livelihood in terms of jobs, tourism, etc., are all impacted by these activities, it is our onus. The onus is on us to look at the activities that we are undertaking to see how we can minimize the effects of climate change. So just given Jamaica's unique challenges with climate change and social inequality, there is the need to unlock financial flows to assist with funding activities that are deemed sustainable. So it is looking at how we transition or add as an alternative form of financing products and that looks at investing in assets, in green assets and assets or projects that are looking at improving the social condition of Jamaica. And so the instruments that are being offered diversify the pools of financing that currently is offered with the benefit of improving our social conditions and also helping the entities to become more resilient and our economy to be more resilient to the effects and impacts of climate change.
Thank you, Amaka and Patrice. So as Amaka said, we are not the largest emitters, but we are one of the islands that would benefit most from green economy initiatives. And that is why we're having this very important discussion, because it's an economic system that helps to promote sustainable development. And it's something that we really need as a small island developing state. So Amaka, we're switching to the topic of green bonds. And I want to ask, how do green bond transactions work? And what role does the IFC play in supporting green bond transactions in emerging markets?
Thank you. So bonds is not a new instrument. A lot of people have invested in government bonds in the local market, and Jamaica also has corporates and banks who have issued bonds in the local market. But when you talk about green bonds specifically, we call them use of proceeds instruments, which is that you raise the money, but the funds are earmarked to funding projects that have positive environmental benefits. So we call them use of proceeds instrument. It's not general corporate purposes. So the way green bonds would typically work is that an issuer would set up a framework. And then that framework, they would identify the types of projects that are eligible for financing. So what are my eligible projects? When I raise this money in form of green bonds, what projects can I deploy the money to? And for green bonds, it's in several categories. You have the renewable energy, you have energy efficiency, pollution prevention and control, clean transportation, climate change adaptation, green buildings. So all these projects, there are several categories that have positive environmental benefits. You commit that the money you raise from investors will be deployed primarily to those types of projects. And then you have systems for tracking the funds. And then you also have systems for reporting to investors, both on allocation, this is how I use the money, and this is the impact that your funds have had in terms of reducing GHG emissions, amongst other metrics. So that's just in a summary how green bonds work. Now, what has IFC been doing as an institution to scale up, I would say, green financing? And It's in different ways. So we support in two primary ways. We have advisory services, and then we have, I would say, investment services. So through advisory services, from the start, we give a lot of technical assistance to governments and regulators. We help them develop their policies. We help them develop regulatory standards and framework. A lot of people anyone who has ever issued green bond would hear of ICMA standards. We're also one of the founding members of ICMA. So in a nutshell, we work with governments and regulators to develop policies. Then secondly, we also work with companies. So if a company is looking to do a green bond, for instance, and you don't know where to start from, IFC would help that kind of company to look, what are your eligible assets? Where are you currently lending to? What projects are you doing? Which of them would qualify for green? How can you mitigate climate change in these types of transactions? So we help you identify your assets. We help you with drafting and reviewing the green bond framework, right? Which covers everything around your reporting, your monitoring, your allocation of proceeds. We help you put that together. And then we also advise you in terms of system implementations that you would have to make to enable you track these projects. So we provide technical assistance to governments, we provide support to companies, and then we do a lot of capacity building, right? So, the program I came to Jamaica 2 weeks ago was for a training that we had for the market broadly. We met with the banks, real estate developers. We spent a lot of time educating them on green buildings, for instance, to try and create momentum in the real estate space. We have what you call a Green Bond Technical Assistance Program, where we train clients across different emerging markets. We're partnering with Jamaica Stock Exchange on a couple of, capacity building initiatives that are coming up as well. We partner with investors. We train investors as well in these markets. So a third key pillar of what we do is capacity building. And then lastly, on the investment side, we actually also invest in these transactions. So IFC, we're a pioneer for green bonds, green loans. We've helped issuers do a lot of the first blue bonds or the first, biodiversity bonds. We help issuers execute those transactions. We come in as investors as well in those deals, whether in loan or bond formats. So that is just an example. It's not exhaustive of some of the things that we're doing to drive activity in that space.
Okay, thank you very much. So you mentioned support to government and support to companies, but at what point in the process do you offer this support and guidance? And also, is this support available to both the project seeking financing as well as the financing entity?
Yes. So I would say right from the very start. So if I look at our company support, even before from ideation, right? IFC, for instance, we have our performance standards from an environmental and social perspective. So even from the beginning, looking at your environmental and social standards, looking at your overall sustainability strategy, do you even have a sustainability strategy, and what is the right thing for issuers in your sector? We can help you, now I wouldn't say articulate your strategy, but advise you on what is relevant for your sector. And then we work with you from the start, as I mentioned, in terms of actually, identifying your eligible assets and putting together the framework. So we support at the company level, and we also support at the project level. So if a company is looking to, say, finance a certain project, we would look at those projects. We would look at what are the right metrics for the project. We would look at the sustainability indicators of the project and how can we, mitigate the impact of climate change. So we work across, we're even working with companies. We look at your supply chain. You're working with farmers. There is a recent deal we just did with Natura in Brazil, really focused on how to help them source, more biodiverse products from the Amazon, from suppliers who source, basically don't do deforestation and things like that in the region. So we help you across not just your products, but also with your suppliers to green the ecosystem.
Okay, thank you very much. So the assistance is from the very start. That's very good to know. Please note that you can type your questions in the chat, and we'll have a question and answer discussion segment afterwards, where I'll try to get as many questions as possible. From the audience across to Amaka and Patrice. All right. Okay, Patrice, so we know that the Jamaica Stock Exchange has a green social sustainability linked bond guide. And I want you to give me some more information about that guide. What was the motivation behind developing that guide? And was it driven by the global growing interest in green bonds or local interest in green bonds? Just give me some background on that guide and context.
Okay, so I'll start from so the Jamaica Stock Exchange is a member of the UN Social Sustainable Stock Exchange Initiative, which looks at developing the capacity of stock exchanges worldwide to just lead the development of sustainable economies. And so on that front, the Jamaica Stock Exchange has started with a sustainable finance agenda from as early as 2018 in terms of pushing for this type of alternative investment to be examined. In 2020, we partnered with the GOG on a project to create the enabling environment for the Caribbean to list green bonds on the Jamaica Stock Exchange. And building on that project, we got assistance from the IDB in December of 2023 to develop the framework, which is now what we call the Green Bond Guide. Full complete name is the Green Social Sustainability and Sustainable Linked Bond Guide. And we simply refer to it as Green Bond Guide, since green bond is more synonymous with what it is and familiar with what we talk about when we talk about sustainable financing. And what the guide sets out to do is to lay the framework for the issuance of these kind of bonds, green, social, and sustainable bonds in Jamaica. And what it states is based on the ICMA principles that Amaka would reference. And it states in terms of what you can use funding for, what can use the funding for, how these funds will be managed, and how it will be just looking at reviews of it and how the funds will be allocated. So the difference between what happens with a corporate bond and what happens with a green bond is the addition of these core components, looking at how you use the proceeds, how you manage the proceeds. And the objective behind doing this is twofold. It's also an objective of the government of Jamaica, as well as an objective of the Jamaica Stock Exchange to lead in terms of sustainable financing, providing an avenue for sustainable financing. The financial sector in itself has the responsibility to provide that option for investors and issuers. From the government of Jamaica side, what the Green Bond guide and framework does is it has assisted Jamaica in terms of meeting the greening of the financial sector. One of the objectives of greening of the financial sector, which is a part of the IMF criteria that would have been reported in June. So from a government of Jamaica standpoint, the government of Jamaica is also pushing in terms of the greening of or financial sector, and also looking at how it is that we build sustainability in our economies. And from the Jamaica Stock Exchange objective point of view, it is also to provide that option to investors who are becoming more aware as social investors about what is happening, what companies are doing to deter the impacts of climate change and build their sustainability as well. And as for us, also for investors to be able to tap into the financial resources that are available for green financing.
Okay, so if a company or an investor wants to get a copy of the guide, how can they access it?
I can send the link in the chat. It's available on our website, and I can put the link in the chat for that.
Okay, thank you for that. So a question again, Patrice, what is the importance of the guide in promoting the issuance of green, social, and sustainability linked bonds, and how does it benefit issuers and investors? That's the guide that you have spoken about.
Okay, so the Green Bond Guide is a comprehensive resource, and it is designed to support the information that issuers, investors, and other stakeholders need to navigate this new landscape. It provides the details into the principles, the framework, and the best practices for the issuance of these instruments. So green bonds or green social bonds are referred to as thematic bonds. So which are debt instruments, sustainable debt instrument. So what the Green Bond Guide does is it provides the definitions, the principles that are being followed in our local market, the standards, how to apply, or what are the requirements for applying for sustainable bonds through the Jamaica Stock Exchange. So having the framework in place, the Jamaica Stock Exchange will now be moving towards establishing the market, the trading platform for the issuance and trading of green, social, and sustainable bonds.
Okay, thank you. Does it address blue bonds any at all, or it's just green and social and sustainable?
Well, the green bonds are a subcategory of blue bonds, so it would,
It would address it.
it would address it. Yeah.
Okay, thank you very much. Okay, Amaka, so what are some of the critical considerations for successfully executing green bond transactions?
Yeah,
Especially
thankfully.
this region.
No, thank you. And I think I'm very happy that the JSC has already done a lot of work in terms of putting these guidelines together for the market. In terms of, what you need for successful execution, I would say, first of all, you need to have a sustainability strategy. Otherwise, you fall into the, trap of greenwashing. You don't issue green bond in isolation. How does it fit into your strategy as an organization? So if you're a bank, for instance, do you have, net zero commitments? Do you have commitments around what percentage of your assets you want to be green, by what time? If you're a real estate company, what is your plan regarding sustainability? You don't just issue green bond in isolation. It has to be part of the overall plan of the entity, so that investors see that this is not a one-off transaction, but it's embedded in the DNA of the company. And then they trust you, right? You're not just taking their money to get this label of a green bond and make the noise and get the demand, and then leave. So I think that's the first thing. Then second is what you have to look at your business, right? What is your business processes? Do you have enough eligible assets? We have this thing where we call a 3-year look back period. So the green financing you raise is not just for new projects, but it can also be used to refinance old projects as far back as 3 years. So what are your pool of eligible assets? Because that would help you in sizing your transaction appropriately. What have I done in the past? And what is my pipeline looking like in the next 2 years? So that I make sure that the amount of, because this is the use of proceeds instruments, that what I actually raise, I can fully deploy it to green projects, since I have to report to investors on an annual basis until those funds are fully disbursed. And I think another key critical thing to flag is, this doesn't just concern one aspect of the organization. It's not like, it's Treasury's business or it's the risk officer's business. It impacts every single group in the organization. So there is a need to create a very strong internal force, make it a business DNA. So right from the people who are evaluating the project to those who are selecting, managing proceeds, investor relations, reporting, legal, you need to make sure that you have a very strong working group internally. Call them whatever sustainability champions in the organization that would help also push some of these initiatives and help with drafting the framework and making sure that the organization is acting as it's supposed to under the framework that it has put together. Then maybe the last one I can touch on as well is the parties you're using. Who are the parties you're bringing onto your transaction? Again, one key thing you need to be successful in your deal is credibility. People need to see you as credible. And that's where we start talking about an SPO provider. So in these transactions, after you've put together your framework, we always recommend it. ICMA recommendations have a second party opinion provider. So that's an external verification. They would review your framework, review the projects you've put, review your process for monitoring, review your impact metrics to make sure that they are aligned with standards in the industry. They're aligned with ICMA standards. They're aligned with the JSC guidelines. And that gives investors confidence that you've actually done the right thing. Then secondly, you need a competent arranger as well. At the end of the day, it's still a bond that will be sold widely. So you want to make sure that, they are knocking on all the right doors in terms of pockets of investor liquidity, and that they're attracting the necessary demand to your transaction. Then also be true to yourself as to where you are in your journey, right? If you need consultants in terms of, some of these things are really technical in terms of, say, monitoring the GHG emissions avoided by some of the projects you've done. If you don't know how to, if you don't have the skills and resources internally, you get external consultants, so they would guide you as the best practices in your industry and then point you to the right resources that you would use to make sure that you have a credible framework and practices. So these are just some of the, I would say, key points to note in preparing for these types of transactions.
Okay, I think you have addressed some of these the challenges, but just to ask the key challenges, you have worked globally, and I want to know what are some of the key challenges that the issuers and the investors face in the green bond market. And if you can give us an idea of how these challenges have been addressed to promote the growth and effectiveness of the green finance sector.
Yeah, I think for issuers, so if I look at issuers in different markets, part of the things that they would face is, look, if you're doing this for the first time, it takes time. I'm not going to lie to you. It takes time to, put this together. And for them, I can do a corporate bond and, there's not much, they may ask you what is the pricing benefit for me, right? I'm not going to get any. And in most markets, you don't have any significant pricing benefits because you did a green bond over a corporate bond. It will open up more investors for you. A lot of investors that haven't looked at you in the past would look at you. So if I give her an example, we did a deal for voestalpine Steel in Austria earlier in the week. It's a global steel manufacturer. It's unrated, so they have limited investor universe. Every time they do a deal, if they're targeting $500 million, maybe they'll get $650 million. And then we worked with them to do their first green bond. And guess what? The books were now $1 billion. So rather than it went from their usual $650 million that they attract to $1 billion. And that's because it was green. They had a lot more investors looking at them. So, and from that, you can be able to tighten your transaction better. But it doesn't always translate, dollar for dollar from an effort basis to a pricing basis. And that's one key thing issuers face. And we just encourage them and say, look, this is a journey. It's not just about the pricing. It's also about how do you represent yourself as an institution and what are your plans going forward? Because frankly, investors globally are making a very big distinction as to companies who are sustainable and companies that are not sustainable. Then I'll say from an issuer perspective as well, again, these things are very technical, right? And I think I've mentioned the benefits of having consultants or advisors such as IFC come into those process, because there are many things that you don't understand, like where do I get resources? Where do I get this? Where do I get that? ICMA, for example, has a lot of resources online. They have FAQs. They have, so many resources that you can leverage on to develop what you're doing internally. What is the best practice for my industry? That's where external advisors will help you with. Then I would say from an investor standpoint, a lot of issues they have is just lack of general awareness and capacity. How do I analyze these types of transactions? What do I look out for? And that's where some of the capacity building initiatives, even the webinar that Karaya is doing, that is where these things come in place. What do I look out for? How do I, assess and process these transactions? But again, they have the benefit of a second-party opinion provider, which is why I mentioned initially, you need to have a credible second-party opinion provider so that investors can read that SPO report and rely on that in making their assessments. So these are just some of the standard things that we have, generally seen across markets.
Yeah. So I noticed you mentioned credibility a whole lot and the importance of credibility to the green bond market. And so I want to know from the IFC standpoint, how can we ensure credibility and transparency of the green bond issuances? And you spoke about metrics. I want to know what role can certification or verification processes play in building investor confidence?
Yeah. So, I mean, whilst having an SPO is a recommendation by ICMA, 98% of bonds globally have second party opinion. So that's a great way to create credibility in terms of your framework. Then in terms of transparency, it's really on reporting. What are you reporting to investors? So it doesn't stop when you issue the green bonds. You have to report on how you have used the proceeds. And it's advised that you report annually until, some people report until the maturity of the bond, but in many instances, you can report until full utilization of proceeds. So this is how I have allocated the money. And this is a verifiable impact in terms of the impact that these projects have had in terms of emissions avoided and things like that. Then I would say, another way as well that people build credibility is looking at particularly when you start now talking about instruments like sustainability linked notes, looking at your past targets, right? As a company, I mentioned that you're going to set your strategy and you're going to set your plans. How ambitious are your plans, really? Are you just, you want to move from A to Z? I look at your 3-year past historical record and this is what you've achieved, and you only want to move the needle. You need to show investors or give people that confidence that you're taking this journey very seriously, and these are your targets. So this is where I currently am. This is where my competitors are. This is where global standards are, and this is where I have to get to. So a lot of that credibility is built with transparency and reporting. So investors understand your journey and they become a part of that.
Very much for that response. Well, Patrice, from the JSC side, we're looking at private capital. Capital is very important in business. So what specific mechanisms does the JSC offer to mobilize private capital for green economy projects in Jamaica?
What we're doing is creating the regulatory environment that's necessary, as well as establishing the platform that those issuances can happen. Also, in terms of market education and capacity building, as we had said, we are partnering with the international development partners such as IFC, IDB, to help in terms of providing the information that issuers and investors do need to be able to afford this. Also, as it relates to the external reviews, Amaka would have mentioned the external review process as it relates to the reporting as to how the financing is spent or utilized, managed over the years, and the framework that we've set up also encompasses that. We have had the discussions and already have second party opinion reviewers ready to take on listings from Jamaica. So most of what we're looking to do is to provide that enabling environment for issuers to be able to place their bonds, and for investors to have the confidence that the bonds are up to the standards, up to international standards.
Okay, so through capacity building, through knowledge sharing, that's how JSC is fostering investor confidence.
Creating the market, ensuring that the framework is there, and just through our reputation of being an entity that's robust and transparent and promotes accountability, we are using that plus the standards and principles that are set out on the international scale to ensure that our market is able to withstand or stand up against most of the others in there as it relates to avoid greenwashing and some of the other impediments.
Thank you. I know that the guide it's very new. When was the guide published?
It was published on May 31st. So we're able to meet the timeline for May 31st to publish the guide, and we launched in July. So the guide is now public information, and building on the guide, we are now, as I said, establishing the market for issuance and trading, and ensuring that we set up a platform, the requirements that we state are adequate for the trading and monitoring of these listings.
Okay, so much of what you have been doing now is in terms of getting making investors, companies aware that the bond guide is here.
Yes, that the framework, that the
Yeah,
enabling
the
environment
framework is
is here, and also in terms of, as you said, the guide is there to the guide being the primary source of information for now. We are setting up our website, and as you said, we'll be having our market education and capacity building. So there should be in the media a lot more information about green financing, about what JSE proposes to do in the space, what are the requirements, and from the capacity building workshops to provide a lot more information as to what is green financing or sustainable financing, what is possible in terms of what can you use the funding, what funding can be utilized for, and just what are the mechanism for oversight. And also sources. Amaka and her team will be able to tell a lot about in terms of sources for impact investment.
Okay. Thank you very much. All right, so this question is for both of you. And I'm asking, how can green economy investments create mutually beneficial outcomes for both the environment and investors, and what role does collaboration between our international and our local entities play in achieving these results? So Amaka, you can go first, and then Patrice, you can chime in.
Yeah. No, I think, first of all, in terms of just in the broader, well, let's say environmental benefits cannot be understated, because we all want to live, as I said earlier, in a livable planet, right? And, you don't want to be in a house and you're suffering from flooding or from drought or, food scarcity or some of these, hurricanes or issues that we have had in the world, over the past few years. So I think it's a call to action for everybody. But even outside of the, will I say, social benefits to us, climate business is good business. There's a tremendous investment opportunity there for both international and local investors. I mentioned at the start that there was a $4 trillion gap just in funding, sustainable development in developing countries, not even globally, just in developing countries. So that's a huge investment opportunities, and we have to see it that way. If I look at what we've done at IFC, from 2014 to 2024, our total investment portfolio has gone from about $4 billion to over $19 billion in climate. So that gives you the, will I say, opportunities that are in that space. And we're investing in a lot of things, whether it's in energy transition, climate smart agriculture, biodiversity, green buildings. So there's a lot of investment opportunities that both local and international investors can partner together. DFIs alone cannot do the work. So again, the need for more collaboration. And maybe as well, just to touch on some of the ways that we can, co-invest together. Funds have been a great way to drive mutual co-investment. So we've set up, for example, a green bond fund managed by Amundi. And it has investors from not just IFC, where the anchor investor, but it has investors from different places as well. And they invest in green bonds across emerging markets for banks. We have another one that we set up with HSBC Asset Management. Again, green bond fund focusing on the real sector. We've now created a separate blue bond fund that is managed by T. Rowe Price. That again, co-investment by different investors investing in blue bonds globally. So I would say there are opportunities for collaboration, first from local investors and international investors, to achieve the climate objectives across emerging markets.
Okay, from just our standpoint, when we look at what has been done in Latin America and the Caribbean, we see where in Latin America there has been a significant not significant, but comparative to what has been happening in the Caribbean, in the English-speaking Caribbean, you would have Latin America raising approximately $176 billion in GSS Bond Plus listings compared to the Caribbean, which has had just three listings, one in Barbados, one in Trinidad, and one in Cayman, when we look at the sectors that what you can use of proceeds for in Jamaica, a lot of the sectors are the areas that we deemed as vulnerable or critical. When we talk about renewable energy, energy efficiency, sustainable water, just climate change adaptation, green buildings, transportation, housing. Those are all areas that we can utilize these sorts of fundings to develop, looking at how we target or provide access to essential services and generate employment for vulnerable sectors or groups. So there is a lot that we can look at in terms of how we channel these funds and use them for its intended purpose to develop our sustainable economy.
Okay, thank you very much. So you mentioned some of the projects or the ideas of green projects or green bond related projects. And I want to ask you if the guide addresses this, like how can project developers demonstrate that their projects meet the established criteria for environmental sustainability? Is that something that is addressed in the guide? And could you give me a little bit of information about that?
Sure. So the guide does mention some of the sectors that you can use the funding to investing, and I'd mentioned some of the green ones as well as some of the social ones, food security, affordable housing. So these are all areas where issuers can utilize or draw down on funds or ask for request funds from a bond to invest in projects that have these focus. And where it is in terms of them, it's more in terms of them showing what's the benefits, and benefits, or how it is that what are you going to be reporting, what are you reporting on impact. If you're saying you're doing renewable energy, solar systems, etc., it will show a resounding impact in terms of reducing greenhouse emission, in terms of utilizing clean energy. So the impacts are really where it is that that shows the difference between what you're using the funds for from a regular corporate bond versus a green bond. So it should have an environmental or social objective. And those benefits are what it is that you report on. So if you are an entity raising funds to do a green project for your entity to set up solar system or utilize wind energy, then you should be able to show where you are now in terms of your utilization of energy, and map that, as we said, with consultancy assistance. We'll be able to say, okay, how much are you using or emitting, etc., and then look to see, based on your investment in these renewable sources or efficiency sources, what would be the impact that you will have on reducing your carbon footprint, or the entity will have on reducing its carbon footprint, or how it will contribute to improving social conditions, or improving the lives of vulnerable or just the general population.
Okay, thank you very much for that. I'm going to be taking questions from the chat. So the first question is from Kadian, and it says, Amaka, when working at the micro level with businesses, do you have a guide that you share that helps them to position themselves to access these bonds?
Thanks, Kadian, and the answer is yes. So I've just posted a link on the chat, which is one of our sources, which is basically IFC's Green Bond Handbook. So it's a very step-by-step practical guide that works with issuers who want to issue these types of instruments. So we do have multiple resources, but this is just one, and I've posted it on the chat.
Okay, thank you. Okay, so from Trisha Gay O'Connor, we aren't necessarily known for having a green agenda. And so I'm wondering whether a green bond issue is likely to have more success if it targets investors outside the local market. Any thoughts on that, Patrice?
Just going back to what Amaka would have said, it's the expectation of returns from a green bond versus a corporate bond is it's no different. Investors do expect a rate of return. The additionality that you get is that you are now investing in something that considers a benefit, an environmental or social benefit as a bonus. So I don't think that our investors are any different, would be any different or relate to it any differently. In terms of the projects also that can be invested in, we're talking about renewable energy. So there would be no difference with a renewable energy listing generating income versus any other for any other reason in terms of the business operations.
Maybe to add on to that as well, right? Because I mean, the question said, if it would it have more success if it targets investors outside the local market? I think frankly, one thing a green bond does for you is diversification of your existing investor base. So think of the fact that the people who are buying your current bond, they're not going to not buy it because it's green. If there's anything, you've made the instrument more attractive to them. So in addition to your local investors that you have, you then also open up yourself to another avenue of investors, which are the international investors as well. So I wouldn't say you're targeting just the external investors. You're targeting, you're targeting all investors. You want your instruments to be able to reach as many people as possible. And that's the diversification that the instrument brings, because in addition to your existing pool, it's opening up new investor pools for you as well. And maybe, that's where a lot of this also has to come from the top when you're talking about a green agenda. And, I like the way you said we aren't necessarily known for having a green agenda. So maybe that needs to go to your government, Patrice. But a lot of regulators.
We do have green agenda.
Exactly. So
it's just not publicized enough.
It's not just publicized, but when a lot of work starts to be done in terms of, I know Jamaica has net zero commitments. They have Paris alignment commitments, but again, it's about also signaling from the top. What you tend to see in most instances is that the sovereign tends to become the person who maybe issues the first or the second green bond. Investors also see that, and then other markets starts to follow. Now, JSC has also published guidelines for it. So it shows that it's becoming more and more. It's a national agenda. And it's only a matter of time. I'm being super honest with you. Before it starts, these things always go from, I say it normally goes from optional and later it becomes mandatory. Regulations are starting to move. So you're starting to see a lot of investors globally, embedding ESG into their investment requirements. Even us as World Bank, when we go for roadshows now, even as big as we are, we're AAA rated, investors are asking us, why is your bond not green? Why are you just doing a corporate purpose bond? We want all your bonds to be green. That's the kind of, will I say, measures investors are starting to require. And guess what? These people, so even the banks who own majority of these asset managers or pension funds or these institutions, they also have their own investors. So when we now invest in companies, because we're getting this demand from investors, we're also saying that all our lending has to be Paris aligned. So if we're lending to a client, we're asking you, how is this loan mitigating climate change? So at the end of the day, it becomes a spiral effect, and it's only a matter of time before you see it becoming more important, even in the local market. So better be ready now, than wait for the curve to shift.
That is true. Okay, so the next question is from, I'm going to take Gabriel. Within the next 5 to 10 years, in the panel's opinion, how scalable can green building become in Jamaica? This is in relation to getting buy-in or lack thereof from developers, cost of materials, interests of potential buyers, and so on. So Patrice, you can start.
Patrick, can you repeat the question, please? Sorry, I was trying
it's asking about how scalable a green building can become in Jamaica. Green building or green infrastructure.
Amaka, you want to take this one? Because I know IFC has more experience with green building.
Yes, we actually have our own certification, because green buildings are really buildings that are certified to be green. And EDGE, which is owned by IFC, is one of the certification agencies. And frankly, we see tremendous opportunities in Jamaica. We hosted a full-day workshop with real estate developers on green buildings. And just giving the scale of, whether it's tourism, the hotels being built, there is a lot of opportunity to scale up green buildings in Jamaica. Again, at the start, you always tend to see developers, worry about costs. But there are several, I would say, incentives that sometimes are given by banks, not in all markets, but we start to see those types of incentives. And again, even the long run value of these buildings, people who rent, so some of the big green buildings that some of our clients have done, the renters see long-term value in these buildings as well. So it's only a matter of time. It's where the world is moving to. You see cooling systems now, heating systems, all focused on reduction of energy consumption. So it's a trend, and we see it scaling significantly even in Jamaica in the next 5 to 10 years.
Right.
And the same thing from a stock exchange point of view in terms of just us and green building. That is true in terms of where we look at the cost, at our costings and how it impacts our overall expenditure and balance sheet. We are fully solar operated. Our buildings are supported by solar fully. So that lens in terms of our expenditure is reduced as it relates to paying electricity bill. Also in terms of focusing on green building as well, there's also improvements in terms of employee productivity as well, when certain factors are taken into consideration in ensuring that the environment that they're working in is conforming to standards, to the international standards. Also in terms of just looking at efficiency in terms of water, use of paper, etc. Those are all benefits that will come back around to the company in the long run.
Right. And based on, as we said in the beginning, our climate, our change in climate, we are expecting more extreme weather events. We're expecting to become hotter. So we're going to need more cooling systems. We're expecting more intense storms. So there are a lot of reasons why we need to build with resilience in mind. So it's not something that's going away. It's something that is going to become more and more topical as we continue to deal with climate change and climate departure, especially in the Kingston metropolitan area. So it is something that is scalable. It's something that is not going away. And it's going to become more and more important for us as a small island developing state that is very vulnerable to be building with green infrastructure and building with resilience. So I think we have time for one more question. It's from Melissa. It says, what is the average return on green economy investments? And how long does it typically take for investors to realize their return? And I know I was anticipating that question because I know there's a kind of mismatch there between long-term nature of green bond investments and the shorter term horizons of many of our investors. So Amaka, could you take this question?
Yeah.
What's the average return?
So it all depends. It's like every other fixed income instrument, right? Because at the end of the day, it's a bond. It's a fixed income instrument where you get coupons semi-annually, and then your principal mostly bullet at maturity or amortizing. And in terms of your average, average return will depend on, the same way every bond price is, which is where is the government, if it's in the local market, where is the government pricing, plus what is the credit spread for that entity? Because at the end of the day, it's still a credit instrument and you're taking a credit risk on the company. It's not project financing. So that's one. So the return you make will depend on the general interest rate environment in the market. Where is the government borrowing at? And what is the spread that this issuer, based on their credit, should pay relative to the government? Then in terms of tenors, again, green bonds they're not always 10, 15, 20 years because some of these things are infrastructure projects. No, a lot of these bonds are 5 years, for instance, even sometimes 3 years. So you would tend to see, again, the same profile you would see in the corporate bond market, which is between 5 to 7 years. for many of these corporate issuers or bank. And that would be the horizon for your investment. Can you see shorter 3 years? People tend to do less of that because, again, you need time to deploy all the proceeds. So you don't want to do a short 2-year instrument and then you haven't fully finished deploying the instrument and then the bonds mature. So typically you would see an average tenor of 5 to 7 years for most of these types of instruments.
Okay, I hope that helps. Melissa. Okay, she said, understood, thank you. I'm just going to give one more quick question. I believe you addressed this already, Patrice.
Yeah.
But, yes, she wants to know if the guide can be applied to blue bonds. And I believe you already said yes.
Yes. So
Okay.
same thing with the guide I posted from IFC step-by-step guide. Blue bonds are an aspect of green bonds. So it's a type of green bond that is focused on preservation of the blue ecosystem, which is marine. So it is exactly the same principles that would apply, but what you're using the money for would be directly related to ocean-linked activities, or what we call the blue economy.
Okay, thank you very much, ladies. I believe we are out of time. We're having such a very good time here. So thank you very much. I think the discussion today was very robust. It was very informative. I'm sure everyone, we have learned a lot about the green economy, about green bonds. We have heard about key considerations when we're looking at green bond transactions. We have looked at some of the challenges. We have talked about the support, and I hope we take up the support that's being offered by IFC and JSC and the guide. I'm hoping that we really take a look at that guide and learn from it, because they have really helped to create an enabling environment for green bonds in Jamaica. So thank you again for joining us today, and stay tuned to the Caribbean Alternative Investment Association for more webinars in this series. And this concludes our session. Thank you for joining us.
Thanks for having us.
Thank you.